Welcome everybody to the Chinchilla Pickin' Podcast. It is August the 4th, 2024 at 4:10 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only Brandon Beaver. Brandon, how is it, man?
It's all right. Doing all right. SummerSlam was last night for the WWE fans. I don't know if you saw. Well, you probably didn't watch it. You're not a wrestling fan, but one of the wrestlers named Jacob Fatu went for a spot diving on an announcing table, and it was very clear that the last part of the match was ruined by him possibly breaking his leg.
Oh,
But yeah, he was on the sidelines. He was shouting cuss words and stuff, and then the end of the match just kind of Roman Reigns returned to it, but I think he was supposed to return to Spear. It was a whole thing. But anyways, not a wrestling podcast, so
gotcha, gotcha. Maybe you should start one. That would sounds like something you'd be great at doing.
yeah, you know what? If I had the time, I would. Here's the thing: you remember one of our previous colleagues? By his name is Eric Roach.
Yes, yes,
He's
yes.
been talking to me about wanting to do it for a very long time. I just don't have the time to do it. If I did, I'd love to.
Yeah, right. You are busy. You are very busy. It's so hard to get a hold of you for anything.
Yeah, and the wrestling podcast market is so it's more fragmented even than the finance podcast market. I mean, there's so many of them, and then you're going out against like some ex wrestling legends and stuff. That would be tough. It would be tough to get any consistent listeners in that. I don't know.
Right. Gotcha. All right. Fair enough. Fair enough. Yeah, it's August. It's the hottest month of the year typically around the United States at least. I don't know about the rest of the world. We do have a few international listeners every week, but for us, August is it. So yeah, we're dealing with the heat. Everybody got their ACs going. They say that's not the best thing for the environment. Running your AC just makes the conditions worse. I don't know. I tried to listen to NPR every now and then. You know, broaden my spectrum of news where I get it from. So there you go. I do want to
Yeah.
brag.
Like, hey, I'm all about the intellectual stuff. Like, I like, listening to lectures and things like that when I can, but NPR is just so boring. So boring. And then
I know what you're saying. It's
it,
very hard. You have to get used to it. You do have to get used to it.
and especially when they do the fundraising drives every 5 seconds.
Yeah, I'm not a fan of that. But anyways, I do want to brag for a moment. I've talked about how I sold Tesla and made some profit off it, and I didn't even sell it at its high. It kept going higher after I sold it. Um, and other people made more profit off it than I did. But I said it's going to go down, and it's going to go down in August, and it's going down. And I believe once they get to that August 10th, is it, or August 15th, one of those days when they're meant to be able to roll out the new robo taxis. Every Tesla is meant to be available to be a robo taxi, new
Yeah.
software. I keep saying it's not going to work, and it's going to cause the stock to drop even more. And so that's what I'm watching and what I'm waiting for before I would even think about getting back in is after that announcement and after to see if things roll out good or bad during that time. That's what I'm waiting for. But Tesla never stays inside a nice, neat range for too long. They always move up or down, and it's a very volatile stock. So if you're looking for volatility and something to swing trade, if you will, Tesla is definitely a good stock for that every year. So, but right now I am waiting. I am patiently waiting on the sidelines. In fact, I in our group chat that Brandon and I are in, one of our group chats, there's many. I've mentioned that I'm sitting on cash right now. I'm waiting for an investment, and it's probably that was X. I did not time that. I could have timed that better. I really couldn't have timed that better, and I didn't even mean to time it that way. It just turned out that way, and sitting here waiting, and I think maybe some opportunities. We're gonna get into this in the show, in the meat of it, but maybe some opportunities are out there now. We'll see. We'll see.
I mean, look, Intel just dropped like 27%. It's got still a price to ratio of like 90.
Yeah,
So
I wouldn't buy Intel. I've already made that mistake, and I barely inked out like a less than 1% profit on that. So
yeah, but there's still
no.
there's still so many out there that I'm looking at, and I'm like, hey, not yet, not yet. The
So
Nasdaq's in correction territory, and I still don't see Berkshire Hathaway looks. It seems like Warren Buffett kind of agrees with me on this. They're sitting on a record amount of cash right now.
yeah, so me and Buffett are sitting on cash waiting. So I'm in good hands. Good group of people. What do you say we get the show started? But rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You're the live back and forth, the bicker and the banter right here on the show for you. And I believe Brandon's going to take it away like usual.
Yeah.
But I don't know which way you're going to go with it, whether you're going to go
Well,
with the earnings or what we both agreed to talk about.
yeah. Let's talk about like what we both agreed to talk about first, because I think that's going to take the most amount of time, and then the earnings. If I have to gloss over them and just hit the most important points in them, then I will do that. Um, Look, Warren Buffett's goal is to be invested 100%.
Yeah.
That's his
So, I
goal.
mean, so
So if
yeah.
he's sitting on a record amount of profit, that tells you that he thinks that, he's not seeing anything in the market that is low risk that can make him a lot of money.
And I agree with him right now. I don't see anything. I think the market's had a tear. It's a tear led by Nvidia and a lot of the tech companies. And Nvidia, rightfully so, led the tear. Could they have been overbought? I mean, I've called them overbought before, and I was proven wrong. And some of these tech companies, could they have been overbought? I mean, we're gonna see. We're gonna see. I got to see the numbers first.
Well,
I got to see the information come back in.
I think the danger is that the AI chips are overbought.
Or
That's
just overbought into AI things like everybody's been saying on, like, we're not the only financial podcast out there. If you listen to the other one, like ours, they a lot of them have said the same thing, that AI, you can't just buy into everything with AI on it. I mean,
yeah.
there's got to be some fundamental reason here, and if there's not, then quit buying it.
Not just the stocks. I mean, I think the actual chips by companies are being overbought themselves.
Oh,
Yeah.
yes,
And it's
yes.
triggering, the stocks to go higher, Nvidia to go way higher probably than what it can sustain, but we'll see.
Well, again, it's driven by this whole. So Nvidia had these chips, and everybody had to have them in order to run AI, and it's driven by this. I got to be first. I got to get it. I got to get it. I got to get it. And everybody was in a race to buy as many as they possibly could, so that they can outcompete their competitors.
Yeah.
And instead of just buying, just a few in order to run some precise programs, they had to buy a ton.
Yeah. All right, let's get into the jobs here. Payroll
Jobs. All right.
payroll is increasing by 114,000. This fell short of the 175,000 median forecast and underperformed most of the 74 forecast that was in Bloomberg's survey, at least. The followed a 29,000 cumulative downward revision to payroll gains over the past 2 months. So we've been revising our estimates downward and downward and downward, but still missed on that. Look, $114,000 or 114,000 jobs. I mean, that's still historically strong for the United States. It's just not as strong as what it's been for the past 4 years. So we could still have a decent economy and be in a recession at some point, right? Historically strong here, just not as good as it was in the past 3 years.
Well, all right. Couple different things there. I sort of agree and I sort of disagree with you on whether or not we can uh, be in a recession with a strong economy. Yeah, yes, you can, because we were technically in a recession 2 years ago, and economy was still powering on.
Yes.
We had the 2 quarters of negative GDP growth, and we powered on. So yes, you can, but you do need to see some downward in the economy. I covered the trucking industry. We covered the 25% drop in companies buying goods that we saw from container ships and containers coming in. We covered that last week, so I don't need to re-go over that. But when you couple that with job growth slowing down, with unemployment ticking higher, now you're looking into now we're in a Q3 that we're 1 month in, and you're questioning, are we going to see really enough sales to spur on more jobs, or people are already hired enough. They've already fully hired and they don't need to hire anymore for the holidays.
I think we're right at the point right now, like I said last week, that we're about to see if it's going to be a soft landing or a hard landing. I think it's coming up in
Gotcha.
the next like 3 months. I think we're going to find out for sure. Soft landing still not out of the question. It is funny to me though, even though I've been hard landing for, I don't know, 2 years now. I've been on the hard landing side. It's funny to me how many people have switched so quickly over the past week from soft to hard landing and now are expecting a recession when they weren't a week ago. And I have to tell you, I really think that the response to that is because of the stock market's response. If the stock market would have been doing what it did for the past 6 months to a year, and every time we had some slight negative news on labor and wages, and we started to price more of a rate cut in September, and the stock market went higher. If the stock market would have went higher, everybody'd still be in the same boat they were last week.
Yeah, not everybody, but majority of people, yes, I
Except
agree.
except for
Um,
me.
yeah, because the stock market does predate the actual economy by three months. That's what they say. It's 3 months ahead of the economy because a lot of big investors and investment banks kind of see the numbers coming in before we do, because they have people who their only job is to sit there and sift through historical data and compare to what's going on right now, and that's all they do for 80 hours a week. And so they're able to spot things sooner than you and me on Main Street here, and we don't spot it till we feel it. So does the market predate the economy typically by 3 months or so is what the time range is on that. But I think it's more of the data is what we're seeing, and the data is leading the way, such as the unemployment ticking higher, such as companies buying fewer goods, such as UPS saying, "Hey, we're gonna have a bad Q3, and we're gonna ship fewer products. It's not going to be good." Those things are what's, I think, leading the way here.
Okay. So I want to talk about the Sahm Rule, which I might be mispronouncing because I've never heard it spoken out loud. I've only read it, and they may have talked
I've
about
never heard it.
yeah, I don't know. Um, it's a Sahm Rule recession indicator. This helps determine whether an economy has entered a recession, so to speak. They rely on monthly unemployment data from the Bureau of Labor Statistics. The rule looks at the 3-month moving average for the national unemployment rate. If the average rises by 0.5 percentage points or more relative to the minimum of the 3-month averages from the past 12 months, it signals supposedly the start of recession. I still like to see the GDP declining for 2 straight quarters. I'm old school. It's more simple. Let's just stick to one thing and agree whether or not we're in a recession. Um, but anyways, this was triggered because over the past 3 months, the unemployment rate has averaged 4.13%, which is 0.53 percentage points above the 3-month average low of 3.6% over the past year. The economist Claudia Sahm, however, does not believe that the economy is immediately on the cusp of recession. However, she does express concern about the trend. She said the unemployment rate, although historically low, has been rising, and the number of jobs added each month, while still strong historically, has been trending downward. She also said that she doesn't think that the economy is on the cusp of recession, but she says that we're still in a good place right now, but until we see signs of stabilizing or leveling out, I'm worried.
Well, here's my thing to add to this is I do see I just pulled up a quick graph of the unemployment rate, and over the past um 24 months, you see an obvious tick higher in the last 3 or 4 months. It's definitely you see it within a range, and then all of a sudden, the last 3 or 4 months, you do see a line going straight up. So you do see, and it's straight up. It's not crooked up. It's not up and down. It's straight up. So I do see what they're talking about there, just in the graph. It's visible to anyone. If you want to pull it up, go on. I just Googled it, so it's very easy to find. But one thing that I would be more concerned about is if we cannot keep up If we can't maintain a high enough job growth, you become the China problem. So China is creating jobs every month, but they can't create jobs. And I covered this earlier this year. They can't create enough jobs compared to the amount of people they have graduating college or university. They have more people graduating university than they have open jobs. And that's a problem for an economy. So you can be positive job growth, but still be in a sinking economy.
Yeah, I agree. You know, I've always said that I didn't really care that much about the educational system in China if it's not producing jobs, you know, or better jobs than what we have here in the United States, and who cares? I've always said that. So I don't know. What I really want to look at though, it's not necessarily the unemployment rate. That's whether or not the Federal Reserve is going to raise interest rates or cut interest rates. I mean, rather, you know, we really need to look at inflation because all this stuff is sort of a symptom of what the Federal Reserve is trying to do, and their core point is to lower inflation. And Jerome Powell is very much taking a similar stance on inflation and unemployment that the Fed did in the early 1980s, 1979, I think it was, really when they started saying, hey, we're going to conquer inflation and then we'll worry about unemployment. And I think Powell's kind of in the same boat. Inflation is down nicely from 9%, and I think it was like 9.6%. Now we're down to near 3%. But the target's 2. And 1 percentage point, you don't think that matters that much, right? But let me put this into real world terms here. If you are looking to retire today and you're going to be on a fixed income, 3% unemployment means that by the time 22 years, 3% unemployment means in 22 years, prices are going to double.
You mean 3% inflation?
Yeah, at 3% inflation in 22 years, prices double. That means if you're on a fixed income in 22 years, your standard of living is cut in half.
And most people, a lot more. Sorry, not most. A lot more people are living 20 years past the retirement age.
At
That is more
2%,
commonplace.
at 2%, the Fed's goal, 2%, it takes 50 years to double. So add 30 years so that's a big deal to people, you know, over the long term. If you're looking at retirement right now and saying, hey, I'm going to live to 80, you don't want to say, you know, be a smoker like me, for example. And then if you're retiring right now, say, I better smoke more cigarettes so I don't live till I'm 88 and broke and homeless.
Yeah, and yeah, so I mean that's the real implications of the inflation. And the Fed admits they have more work to do, and they've talked about maybe making it a range to fall within, and not just a direct 2% flat number. But and even Elon Musk came out recently in an article. I think I have it up here. Let me see. Do I have it up? And he came out was very critical of the Federal Reserve Bank, saying that they should have already cut rates already.
We don't know, though. And neither do they, because, you know, everything's so retroactive. They're reacting. They have to react to the data that comes out. So we don't really know what the data is going to say in September or, you know, November. It's hard to predict that.
Come September, everybody fully expects a rate cut. Now, if is it going to be a 50 basis points, 25 basis points, or are they going to go full 100 here? Who knows? But we've all been pricing in a rate cut of some sort in September. This could be the market pushing the Fed Reserve into having to make a rate cut because there's too much other data. I don't know. I think the banks are just doing just fine. They're making money with the higher rates. So it reported on all of their earnings calls that they've made more money with these higher rates. And so they're happy either way. But they're saying for the economy's benefit, they would like a rate cut.
Yeah. The next big report's going to be the CPI August 14th, Consumer Price Index. So we'll see what that says. There's been a clear trend downward in inflation over the past 12 months. That's a good thing.
Yeah.
And
The
and I
Fed's done
thought
its
we'd see
job.
Yeah, I thought we'd see fits and starts. There's been like maybe like one or two of those, but not as many as I expected. So it's been a very clear downward over the past 12 months. Hopefully, we continue to see that clear downward trend, and maybe we can get an interest rate cut in September. If the economy can stay healthy, all the cycling out of tech that we've seen over the past like 2, 3 weeks is going to reverse. So if the economy can stay healthy. In this kind of situation where we're at, not being in a recession yet, we get a Fed rate cut and there's no recession, no hard landing. Of course, it's very bullish for the stock market, but
It
we'll
is.
see where we
It
go.
is.
I am,
Um,
I am seeing some other things, by the way, that concern me here.
like what? Go ahead.
So, in the second quarter, foreclosed and seized office buildings, apartments, and other commercial property reached $20.5 billion, the highest level since 2015, up 13% for the first from the first quarter. So, just a 3 month increase of 13%. The commercial real estate sector is under duress. The commercial backed securities right now, one third of them are stressed right now. One third.
Yeah, so we've talked about this on this show now for almost 9 months, off and on, about the commercial real estate market and whether or not, it's gone down enough to start investing in it, and that we knew that was going to be an issue coming out of COVID, that it was going to start then. We reported on it then. I brought it up multiple times since then. All the earnings calls that I've seen from the big banks so far this quarter, they have said that they see the commercial real estate problem, as they put it, coming to an end here shortly. So they're seeing all these distressed properties finally being foreclosed, liquidated, out of the system, and it didn't cause the problem that everybody thought it was going to cause. Because when we first started reporting on it, it said it could be multi-billion, hundreds of billions of dollars, or even $1 trillion effect on the market if all these things collapse. Well, things collapse, but the banks are like, "Hey, we survived it. We took some losses. We think it's coming to an end soon."
Hopefully, it's coming into an end soon. If it does, then we're at the peak of it because it's still happening. So we're still in the middle of it. If I mean,
But
that's
they knew that there would be foreclosures. We all did. We all knew there'd be foreclosures. We all knew there would be a lot of these office buildings just going empty and not being used, and we knew things like this were going to happen. Everyone
yeah.
did. So
I mean,
everybody tried to pull money out of it. Pause projects that weren't even started yet and say, nope, let's put a pause on this, that kind of thing. And now, we're hoping that this is something that can be survived by the banking industry, and not take out too many of the regional banks in the process, because that's the concern. The big banks will be fine. It's the regional banks that, if they're heavily invested, will suffer the loss.
yeah, it was happening in Europe and Asia long before it was happening here.
Yeah.
So I mean, and I don't think it was Europe and Asia's problems that hit us. I think that we just kind of all manage our money the same way now. As far as central banks go, the countries manage their monetary policy the same way, and so we all have similar problems to each other. It's just some have them worse than others. McDonald's reported earnings, and I wanted to touch on this because they had that Big Mac index where they kind of track the price of the Big Mac, that and
Yeah.
supposedly the
I did not know this existed. Okay.
yeah. So Google it because I don't feel it's been like 10 years since I read about it. I don't really know that much about it anymore to be able to explain it, but it is a thing. They track the price of the Big Mac and it supposedly predicts recessions, but for the 3 months that ended in June, McDonald's reported an adjusted earnings of $2.97 a share. Wall Street's call was $3.07 a share, so a big miss there. Revenue came in at $6.49 billion. They missed the consensus estimate was $6.62 billion. Really wanted to cover McDonald's on here because it does kind of reflect, just as the consumer staples that I covered last week. It reflects the earnings of the middle class and the working class, probably more than a lot of other companies does. In the same quarter last year, the company posted a 10% and 12% year over year growth in those markets, respectively. Second quarter earnings were 6.3% lower than a year ago. marking the first year-over-year decline since 2022. The same restaurant sales in the United States and international operating markets slipped 0.7% and 1.1% from a year ago, respectively. Guest counts declined and the average check size increased because of menu price increasing. So I think this is another earnings that's telling us that, people are trying to scale back on discretionary purchases because they're finding it tough to afford the things that they need on a day-to-day basis. So they're eating in. Go ahead. I can't hear you. Were you muted?
Sorry, that's me.
You're
Yeah,
good.
I muted
Okay.
myself. What's the margins?
I didn't pull those up. I was just looking at revenues on this.
Ah, see,
So
because I'm over here on StockTwits, reading through what everybody here is saying about McDonald's, and I see a common theme here: paper thin margins, hashtag bearish. Paper thin margins, hashtag bearish, and they're complaining about the margins on McDonald's, and that that's why just a small drop in customers can really affect the actual profit of McDonald's, and that's why they have to find ways to make these what is it here? Hold on, I just saw it. It is the $5 meal deal they have going on to make these meal deals so that people can afford their. It's meant to be a cheap, fast place to get food. So, you know, that's what people are going there for.
well, we
When I
know if
could go
it's
to a
set on
sit down restaurant and pay the same as a McDonald's, I'm going to go to the sit down restaurant.
if it's said on StockTwits, Dave, it must be true. We've covered so many great intellectual quotes from them.
You touche, you got me there.
So here's
But
the thing, though.
but it is fellow investors, a lot of them, and when you see something repeated over and over and over again, that is a signal to me to like, okay, is there some truth to this? That's why I asked the question. What are their margins?
Okay, so there probably is because they're engaged in a value war meal right now, or value meal war with the other fast food giants trying to keep market share, not lose market share, and then they got the $5 meal deal coming up. I think that was actually a couple of weeks ago that launched. So you remember the days, Dave, when it was the dollar value meal?
Well, see,
Wasn't that
here's
long
what I
ago.
remember, and I'm going to age myself here. When I was in college and we took college road trip, there was a deal at McDonald's. You could get 17-cent hamburgers, and I would go in there and I would buy like 30 of them, and I would have hamburgers for me and my buddies to go on road trip from college. And that was the thing we did. So it's yes, inflation. I just aged myself. Things have come a long way, but everybody said it was a bad quarter, but it was only 1% down same store sales after a big public uproar about the cost of everything. When you only have a 1% drop, I mean that's not too big of a change. I remember when Target had a big uproar over its bathroom policy, and their store sales dropped by, I believe, correct me if I'm wrong, was 10 to 20%
Yeah.
revenue, and so that made them change their policies because that was a huge drop in revenue versus a 1% same store sales. But McDonald's has already pivoted and made the $5 meal deal due to it. So it's not really affecting them as much as everyone says it is. People are still going to McDonald's.
Yeah. I don't remember the days that Dave does when he would jump into his horse and buggy and then go on a college road trip with his buddies at 17 cent. But I do remember 25-cent ice creams.
Oh, nice.
Remember
When the
those.
ice cream machine worked,
Yeah, exactly.
there you go.
All
There you
right.
go. Horse and
Another big
buggy was cheaper.
no gas. No gas cost.
Yeah, right. Uh,
Apple earnings. Apple reported $1.40 a share on $21.5 billion in net income in the 3 months ending in June 30th, topping consensus estimates of $1.34, according to FactSet. Earnings grew 11% year over year. This was a record quarter for them, despite slowing iPhone demand. Still
and
more slow.
despite Buffett taking out half its share, half its stake.
Yes. The tech giant raked in $85.8 billion of revenue, besting forecast of $84.4 billion. It rose 5% annually thanks to $39.3 billion of iPhone sales, above projections of $38.6 billion. In the second consecutive quarter, though, iPhone revenue did decline, and investors hope this trend will reverse as the company introduces new AI features, which will come in the fall. For the quarter ending in June, iPhone sales decreased by 1% compared to the year prior. They were at about $39.3 billion in revenue. Overall, Apple revenue increased by about 5%, as I said. I don't know if I'm comfortable with a 30 price to earnings ratio. We got about 30% price to earnings ratio, 32% forward earnings on this. I think Buffett's move was based on valuation. I think that he cut about half of his stake, and what he was looking at, he's saying that we're probably going to see some deals elsewhere that'll make us more money that Apple will. I don't think he's predicting a crash in Apple stock, but I think that he's saying that there's probably over the next 12 months going to be some better deals elsewhere that will make us more money than what we have in Apple right now. Will.
And that's what I believe to be true as well. I personally do not own Apple. I did over the past 12 months, but I exited my Apple position. I don't, I don't see I mean, they were stagnant there for a while. They were really stagnant, and that's when I was holding them, and they weren't moving at all. And I just, I mean, where's the growth going to happen? Apple TV has so far has been a bomb for Apple. They haven't had the subscriber growth that they wanted, even though it was very cheap price. Their services aren't giving them as much of the total revenue as they want. They're still getting a majority of the revenue from phone sales. And so that's not they wanted to branch out from relying on phone sales, and they can't do it. They
Right.
just can't do it.
And they used to be the big dragon in China. Revenue in China declined by over 6%. iPhone
Well,
6.
China became. I hate to interrupt you because I hate doing this, but I'm going to do it. But China became a very protectorate state in regards to its economy. China has kicked out a lot of the Ford, GM, the autos. They want their own auto companies to do well. Tesla had to really strike a deal with the devil there to keep their cars in. They've kicked out all the most of the competitors when it comes to chips, when it comes to phones. They've really made it hard for companies that even Taco Bell had to create two different companies, Yum Brands. They had to create Yum Brands China and Yum Brands United States, and then Yum Brands China did very, very poorly for a while. I mean, they've become very much, even more so than the United States, a protectorate of their economy and who they let in.
Well, China was the core focus of Apple for a very long time. And I mean, iPhone sales fallen by 5.7% year over year and revenue dropping 6%. This has been a continuous trend for the past 2 or 3 years for Apple. I think it's very concerning,
Yeah, I
especially when you
mean,
focus so much over there.
yeah, I mean, yeah, when you're putting a lot of money into something, you're not seeing the returns you want. It's going to be frustrating for a company, and Apple wants those big returns. I think their success is making a very breakable phone so that people have to buy new ones. I'm not an Apple fan.
Okay, but here's the thing. I've had this iPhone, I don't even know what it is, 11, maybe a 12, something like that for years now. I don't even have a case on this thing. I've dropped it so many times on hard surfaces and it hasn't broken at all. So that's good.
Lucky,
Yeah.
lucky,
So I think they're a
lucky.
little bit tougher now than they used to be. But
About time.
I'm here for Apple. Here's the thing. I wouldn't mimic what Warren Buffett's doing. You're not him. You don't know his reasons. Maybe the next, investor meeting, he'll tell us why he did it. But right now, we don't know. If you own Apple, I wouldn't sell it. If you don't own it, I wouldn't buy it. That's where I'm at.
If you don't own it, I wouldn't buy it, and if you do own it, I would sell it.
I would not. I don't think you sell it. I think it's a very stable company. I think that it's starting to mature, but I think, 10 years from now, you'll still be happy that you have it.
Really? That's what people said about IBM in the 70s?
Well, if you trim it back, but yeah, they did. But
That's what people said about Sears in the 80s.
yeah, that's true. That's true.
I mean, that's what
Well,
people said
Sears
about
really,
Lehman Brothers, in the 50s. Yeah,
I mean,
I mean, there's been huge, massive companies. You can't say Lehman Brothers, Sears, all these companies I'm naming were not massive in their own right, in their own giants in their own field, and yet where are they today? Gone,
It's
disappeared,
like the
nowhere.
early 20th century. Sears was the Amazon of its day.
Yeah,
Mail
and it's
order,
nowhere.
catalog. They sold everything. They sold houses, guns, everything you could think of. They sold.
So giants in the field does not mean permanency in the world. It just means
Sure.
you're a giant right now, and you have to maintain a competitiveness, or somebody else is going to come up and replace you.
Yes. There's always somebody willing to do it cheaper, faster, and better than you if you let them.
So I mean, that's why I'm like, if you're profitable in Apple right now, I say take your profit, put your money somewhere else.
Trim the top. I don't think I'd sell the whole thing. Let's compromise on this. Trim from the top.
Okay, we can compromise, if you will, on that.
Yeah, that's my feeling on Meta too. And it is trimming
Really,
from the top of Meta. I'm gonna take some
I'm
take some
holding
profit.
Meta.
You know what? I guess if you're holding Meta, it just depends on what kind of position you're in. If you've been in it for years like me and tripled your money and did really well, then there's no pain in taking some off the top, right? But no, seriously though, but and this is one of the reasons why following other people isn't always for the best. I mean, because other people are in different situations with different ideas and different positions and time frames and all that than you are. So
Yes, that statement is true. Brandon felt like he had to say that because you can't see us, I was making fun of him because he's like, "Oh, a triple position." Yes, yes, he has done well, but yes, your comment is correct. It stands true. We are all in different positions in our investments, and yeah, there's no problem. I don't see anyone have a problem with anyone selling Meta right now either. But
yeah.
if it was me, I would hold just because I see value in here and I see more profitability down the road.
One of the things that's different about us though is we always talk about our losses and so people can learn from them, right? We don't ignore them. We don't, post, hey, buy this on stock twits and then it goes south and then you never hear from us again. I talked at length about the mistakes I made on China, for example.
Yeah.
So it's also good to talk about like our wins too, so that people do know that we're successful.
Yes, yes, we are making money over the long term pretty well, actually.
Yeah.
Definitely beating the S&P every year. So very, very happy with our successes, but we do talk more about our losses because it gives you a chance to learn from them. So I want to talk about one that's down right now. It's not a loss because I've been in it for long term, and I'm going to continue to be in it for long term, and I have a long term view on it, and that's Bitcoin. Bitcoin's down this past week by a lot, and it's affected all kinds of stocks across the way. Coinbase had a terrific earnings, blew past expectations. Great news, dropped. Why? Because Bitcoin drops. The price of Bitcoin goes down. That means the percentage that Coinbase takes off the top of people making trades, that amount goes down as well in regards to the price of Bitcoin. So it's a direct Coinbase trades directly with Bitcoin, but a higher percentage. So if Bitcoin moves up like a little bit, Coinbase jumps up a lot. If Bitcoin moves down a lot, Coinbase moves down a ton. So that's just kind of how it works in tandem. But Bitcoin, I believe, it's an overreaction to the broader economy and broader market. And it shouldn't be tied to that because there's a lot of strength in Bitcoin right now. There's a lot of strength in some of these major cryptocurrencies, not the little, meme cryptocurrency. I'm talking about the major ones are actually in real life use right now. Um, and some of them I want to talk about, Brandon, is the ETFs, right? So these Bitcoin ETFs have been around since January, and the rule that most of these investment banks have been using is they don't pitch it. They don't pitch these ETFs. They don't try to sell people on these ETFs. They offer it if one of their customers asks. So if an hedge fund is asking about it, if a individual is asking about it, then they will offer it. But the rule has been not to pitch it, and that rule is actually still held in concert by some of the big ones here. If I can find it, yeah, Goldman Sachs, J.P. Morgan, Bank of America, and Wells Fargo all still follow that policy. However, a big one came out this week and says they are going to start having salespeople pitch it, and that's Morgan Stanley. Morgan Stanley's breaking with the other banks and saying we're going to start pitching these Bitcoin ETFs. So is BlackRock. BlackRock's coming out saying they're going to start pitching these Bitcoin ETFs, so on and so forth. This is going to be a boom for Bitcoin. I know BlackRock just went ahead and made a purchase recently of Bitcoins, which they have plenty of money to do that. It was a few thousand Bitcoins they purchased last week, kind of counteracting Germany's continued sell off of Bitcoins. But I see some future because if BlackRock's buying up Bitcoins and BlackRock has Bitcoin ETFs, and Morgan Stanley is going to be actively pitching Bitcoin ETFs. They see the future in Bitcoin. Even Jamie Dimon has stopped slamming Bitcoin at every single interview he's had recently over the last 6 months. He's changed his tune on Bitcoin. So everybody sees a future where Bitcoin is involved. So if you're with me and you're not worried about the weekly drops and rises because it's very volatile. You're not worried about like, oh, it's at 44,000 this month and back up to 60 the following. You're in it long term, then it's a good investment. I'll stop talking for a minute, Brandon. Go ahead.
I think so too. I think what the concern this week was the Fed being behind the curve on the rate cut. And if they're behind the curve on the rate cut, then we're going to see continued downward pressure on inflation, which is a good thing, though. But maybe even further than what's expected, maybe kicking in deflation. That was the fear this week. And if deflation kicks in and we're valuing the Bitcoin against the dollar goes up in value, then Bitcoin goes down. That's the fear. It's not what happened, but it's a fear. That's people were reacting on emotions last week in regards to Bitcoin. I was surprised that there wasn't a bigger kick up in the price, though, once, we started realizing the rate cut in September is probably going to happen. And after the Federal Reserve, signaled it, I was surprised that it didn't go higher than it did.
Yeah, I mean, I don't even think that's the real boom to Bitcoin there in regards to it. I think they have an event. Usually, what happens after it halves, a few months later is when you start to see the price jump up higher. It still hasn't even been a few months since it's halved, so we haven't seen that historical trend of Bitcoin halving and what has happened to the price thereafter yet. So I mean, that was going to be the big boom this year, but as it becomes more and more into society and we continue to have Bitcoin credit cards and Bitcoin ETFs and Bitcoin this and there's a push more of using Bitcoin and investing in Bitcoin both. Right now the push is heavier on the investing part. You're definitely going to see that continue go higher. I still have a price target of 75 to 80,000 by the end of the year, and that's given the volatility of Bitcoin. I could probably be saying that at 60,000 in December 1st, and it could probably hit that just because how volatile it is.
Yeah.
But I see it as very easily heading that, and that's where my mark. That's where my mark is 75 to 80K by the end of the year.
Okay.
So I'm not scared away with it. I think this is more a positive news for it. I think this is just a downturn. And do you buy in now or do you wait for more downturn? Because if the broader market has more downturn in it, then yeah, there could be more to it. So let me talk about that because they kind of go hand in hand. Like Brandon was talking about, the only big news, we don't have any big economic news except for the consumer price report on August 14th. That's what's coming up next, and that's what we're worried about, right?
Right.
So the S&P was trading last week at 20.8 times forward 12-month earnings. That's actually down from July, but the index's long-term average is at 15.7 times forward earnings. So it's still above the forward earnings. This is part of the trade where people think, all right, there's still more correction that needs to happen. We haven't had a correction in the Dow, the S&P, just in the Nasdaq. We need a correction across all three so we can rebalance and then go back in and have a good Q4. I believe that's the viewpoint of some people, and they're worried that there's still more downturn to come in this market. I don't know if I hold that viewpoint or not. I just want to put that data out there for people to hear it. Because here's what I see. Some of the bright spots, the S&P 500 and NASDAQ are both up 12% year to date, even after the sell-off. NVIDIA is up 117%, even after falling 20% from its high that it's hit, right? Some economists are saying there's some bright spots in Friday's job report, meaning there was still a second straight month of workforce growth, even though Hurricane Beryl came across the Gulf Coast, and they said that's what skewed some of the statistics. Big companies had decent earnings. That was Apple and Facebook. Both had decent earnings, even though some of the other big companies didn't have decent earnings. So, I mean, right now, are you buying the dip, or are you saying, hey, let's hold and wait for more data? And I believe you and I are on the same page. Hold and wait for more data.
Yeah. So as far as Hurricane Beryl goes, there were over 400,000 people that had jobs but were unable to work for the past month. And oftentimes what companies do is they rely on short-term unemployment for their employees to get by. So a lot of those people were probably on unemployment benefits while they're waiting for their jobs to come back online.
Yeah, and that's why they're saying it could have skewed some of these numbers here. Yes, no, maybe. I mean, we'll see. We'll see if there's a correction going forward, or if anything stays the same. But I'm waiting for not only the CPI number to come out, I'm also waiting for Tesla and that pivotal date in the middle of August for them. I want to see what happens there, if they're successful or not successful. I'm looking for those big things coming up in August to see kind of where everything is headed. I believe for myself, I'm eyeing Nvidia because it's had a good 20% drop, and if it drops down to even a little bit more, who knows? I might put some money in there. This delay on the chips, the big news that came out, could cause it Monday morning to drop some more and hit my price target where I'm looking at, where I'm eyeing it, and I might buy in. Who knows?
As a trade
That's
that you hold for like a month or two, or as like an investment that you hold for a long time?
uh middle. So a trade to me, Brandon, could be an hour to a month.
Yeah, yeah.
And so what I try to say is there's a day trade, then there's a swing trade, and then there's an investment. That's the three categories I put things in. So a swing trade could be anywhere from a month to 3 months. I'm just a cyclical stock or something like that. I'm putting my money in for a few months. But a trade is something I'm expecting a quick return on, whether it's just a 5% return, or if I'm doing a day trade, it's probably just 1%. That's all I'm looking for, is 1% in that day, and make some quick money and get out. But Nvidia would be more of a swing trade.
Okay.
That would be my time frame for that. It would be a swing trade, and I would be looking to make some quick. That's quick relatively. So on that money there, so that's what I'm looking at. But yeah, that's that. We kind of covered everything I had, Brandon. Are you ready to go into final thoughts?
Yeah, let's do final thoughts.
Go ahead, man.
I'm really looking at the inflation reports. That's what I'm looking at because for me, soft landing, hard landing, it's going to be the tell-all. I think the inflation continues to trend downward, then the less harsh a recession would be. Picture us going into a hard landing, or even something, just a little bit better than that. But we don't. If we have to do a bailout or a stimulus, where's the money going to come from at this point, Dave? 4 years ago, we just spent trillions and trillions of dollars on getting us out of COVID, and then now we have a recession. Man, two-edged sword, right? Because if we go back into stimulus mode, then we're kicking inflation back up. So that's. But if you got high inflation and a hard landing at the same time, what do you do?
There's not much you have to do. You have to cut spending and raise taxes, and yeah, it's not good for. It's a one-term presidency for whoever gets it.
Yep.
Or Congress person for whoever gets it, because if they do the right thing for the economy, they're not going to get reelected.
Yeah. So
Uh,
the major thing that I'm saying is watch the inflation reports, the PPI, the CPI, all that stuff. Watch those things. Unemployment does matter, but I think it's taking a backseat to inflation right now.
There you go. My final thought is I'm still invested in my ETFs, Coney being my top ETF holding. I know it's down a little bit, but that's just because Bitcoin is down. It's causing Coinbase to go down, so people are selling that as well. But it continues to make money whether it goes up or down. It has puts and calls. I keep saying this, and people not listening to me, that hey, it doesn't matter, guys. It's going to continue to make money. It just means I buy my dividends that I get this month. I'm going to buy it back in cheaper, and it's great for me. So I'm very happy with it for what I'm using it for. Now, here's the problem, and this is what I see for some people who invest in something like this is they're looking for a quick turnaround to create a income now and money now and the stock to continually go higher. And I've always told people do not invest some money that you need. So if you need that money, then it's risky to invest in things because if that stock goes down because the economy tanks, you could be losing some of your money you need. But if you're investing in it and you're investing long term and you're using your dividends each month to buy more, then you're going to be just fine in the long term because the cost basis will balance out over time for these ETFs, these income ETFs. It doesn't matter. Like you're going to be just fine when you do the math, do the hard math. I can sit down with anybody, do the hard math. Numbers don't lie. Then they're not biased, so it works out.
Listen to last week's episode for my opinion.
Yeah, and listen to last week's episode where I go in more detail than I just did about it as well. All right. Anyways, we thanks for listening, guys. Please hit the subscribe and like and follow button as always. We hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.